So the presentation is about the legal framework of the Hungarian microfinance sector. And the purpose of this presentation is to provide a short summary of the legislation currently applicable to the microcrediting sector in Hungary. There is no general legal framework regarding the microcrediting sector in Hungary. However, there are special rules in force which regulate the operation of institutions that deal with microcrediting. In order to understand these regulations, it is inevitable to learn about the history of microcrediting. After the political changes, the number of micro and small enterprises started to increase rapidly at the beginning of the 90s. Why is that? Due to the fact that a lot of people who had been made redundant as a result of the closing down of factories, they were forced to set up their own enterprises. Since after the changeover from the controlled plan-type economic model to market economy, these enterprises had to form the backbone of the national economy. The Hungarian governments that came into power after the changes aimed to strengthening this sector. A group of the developed industrial countries made a decision for the first time in 1989 to support the process of economic and political transformation in the former socialist countries of Central and Eastern Europe. The FAR program was started in 1990 in Poland and Hungary. This is where the FAR abbreviation comes from, Poland-Hungary Assistance for the Reconstruction of the Economy. In other words, Aid Program for the Economic Transformation of Poland and Hungary. The government of the Hungarian Republic worked out an entrepreneurship promotion program. As an important element of this, they initiated the establishment of an agency aiming at supporting and motivating the enterprises. The Hungarian Foundation for Enterprise Promotion, the HFEP, in 1990, with a starting capital of 4.24 billion Hungarian forints, it's approximately about 14 million euros. Since the objectives of the FAR program launched in Hungary and the objectives of the HFEP were the same, the HFEP was entrusted with the handling of the aid program of 21 million EKU, reserved for the development of small and medium-sized enterprises. FAR required the setting up of local enterprise agencies network, where their target group was supported in the form of professional counseling and business services. The concept of launching the National Microcredit Scheme was formulated at the beginning of 1992. Let me introduce the organizational and operating structure of FAR microcredit program. There is a question mark here. Who is the odd one out in the structure? The European Community and the Hungarian government granted the donation to the Hungarian Foundation for Enterprise Promotion, whose responsibilities are the following: liaising with the donors, source allocation, providing technical assistance for the local enterprise agencies, professional evaluation of the program, checking program implementation, mediating the sources to the LEAs in the form of earmarked subsidies. The responsibilities of the local enterprise agencies are the following: receiving loan applications, assessing and approving of loan applications, checking loans and risk management. The accounts of the LEAs were managed by the bank that were also responsible for the following: keeping the separate program account of the local enterprise agency, concluding the loan agreements with the clients on the basis of the decisions of the LEA, disbursing the loan from the bank account of the LEA, collecting installments, keeping loan accounts separately from the own loan portfolio, supplying LEAs with data with regard to the loan portfolio. The odd one out in this system is the bank. When the microcredit program was launched in 1992, the operation of profit-orientated financial organizations was regulated by Act on Financial Institutions. The basic function of the Act was to protect depositors and to regulate the operation of profit-orientated players of the money market. Several experts believed that the commercial banks should be included in the operation of the program because, according to the above-mentioned act, only banks may grant loans in Hungary. Commercial banks only perform technical tasks in the process. They did not assume any risks. Why should not the Act on Credit Institutions apply to the LEAs? Since the non-profit foundations involved in the operation did not deal with deposit taking, perform their activities as non-profit organizations, because they did not make any profit, received the sources, the public money, in the form of earmarked subsidy in order to grant loans in the field of money market, requiring government intervention to fulfill specific social goals. The government intervention in this case is justified by the following principle of economics. The market failures, which means a situation when government intervention is required in order to maintain undisturbed operation. Incomplete markets are a type of market failure because the quantity of a product demanded by consumers does not equate to the quantity supplied by suppliers. And certain capital markets can also behave in these manners. During the operation of the program, it was always debated whether it was justified by the applicable act to involve commercial banks in the program. The solution seemed to be obvious. If it is not clear that the Act on Credit Institutions does not apply to the operation of the microcredit program, this fact has to be made clear. The amendment of the Act on Credit Institution resulted that the microcrediting activity of local enterprise agencies was removed from under the effect of the Act. The amendment was introduced in 2003, and the consequences were the following. It became possible to launch alternative microcredit programs. Local microcredit programs were also launched, and the majority of local enterprise agencies could join the Jeremy program. The number of non-profit microfinance organizations did not increase in Hungary, which shows that this is really not a legislating issue, but rather a question of interest in Hungary. Now let's see the obstacles hindering the spread of microcredit programs fulfilling social purposes in Hungary. Limitations of the economic and social environment, financial constraints, sustainability requirements, constraints of the individual players. And the rules relating to the establishment of microfinance organizations in Hungary are the following. Its operation is regulated by Act number 112 of 1996 on credit institutions and financial enterprises. Regulation concerning its legal status is Act number 4 of 2006 on business associations. Its official name is financial enterprise. It may be established with a startup capital of 50 million Hungarian forints. Its legal form is public or private limited company. It is profit-orientated, though it may choose to operate in a non-profit manner too. It may not take deposits, and simpler rules apply to them than to the banks. In the case of profit-orientated institutions, the above-mentioned external rules determine the internal regulations. And the rules are the following: accounting rules, money handling policies, client and partner rating regulation, valuation regulation, transaction rating and evaluation regulation, rules relating to the creation of provision and expected losses, risk assumption regulation, general terms and conditions of business. The internal regulation of the local enterprise agencies are very similar to this, but there is no external regulation or act defining it. What are the internal regulations of the local enterprise agencies to be able to join the Jeremy program? Accounting rules, bylaws, crediting regulations concerning operating manual, risk assumption regulation, procedural regulation, valuation regulation, debtor rating regulation, client rating regulation, rules relating to the creation of provisions and expected losses, management information system, document handling regulation, confidentiality regulation, and regulation relating to the conflict of interest, data protection and management regulation, quality assurance regulation, and also social strategy. Now, thank you for the attention. If you have any questions, feel free to ask.
Annyit még hozzátennék, hogy ez egy rövid áttekintés volt, és az anyagban, amit kaptak, kinyomtatva, illetve hónapi napon pendrive-ot kapnak, ennél egy kicsit részletesebb tanulmány tehát mutatja be a magyar szabályozást, ez csak egy rövid áttekintés volt.
This was only a short introduction to the Hungarian legal framework of the microcrediting sector, but in your folder you have a detailed version of this presentation, and also you can have it in a digital version on a memory stick tomorrow.
Csak kérdésük van, akkor
please feel free to ask.
Hello, my name is Juan Carlos. I come from Spain. I got just probably a silly question. Is something regarding your last slide on the internal regulation for the microfinance or microcredit organization? Okay. Now it's okay now. Okay. It's something in relation with your last slide on internal regulation. Is linked to the interest rate. Is it any good practice or any formal or informal rule of how to fix the interest rate of the microloans? Is according to the market, above the market, or do you have any kind of guide for that? Interest rate. Yeah.
Igen, majd adom a mikrofont, mondtam. Nincsen szabályozás. Alapvetően még az előadás sorozat folyamán ki fogunk erre térni, hogy alapvetően a működési szabályokat az határozza meg, aki a pénzt adja egyrészről. Tehát azoknál a programoknál, amikben mi működünk, ott a donor meghatározza, hogy mi a maximális hitellimit, egyéb iránt pedig a piaci viszonyok behatárolják, hogy mi az, amit el lehet kérni. Tekintettel arra, hogy Magyarországon az állam, tehát közpénzekből, tehát európai és hazai közpénzekből jelen van a mikrofinanszírozás területén, behatárolt kamatokkal, ez meghatározza azt, hogy piaci szereplők nem nagyon tudnak e fölé menni, mert van alternatív megoldás a közpénzekből finanszírozott hitelek esetében. Tehát egyrészt a donor szabja meg, másrésztről a piac behatárolja ezt a kamatot.
Okay, so very briefly, the money is limited or defined by the donors, the one who gives the money for it. So in Hungary, it's the donor who precise the maximum loan amount and obviously the market conditions. And in Hungary, the state, the government participates with public funds in the microcrediting sector with low interest rate. So it is not possible for the market actors to go above this interest rate.
Illetve ez nem mikrofinanszírozásra vonatkozó szabályozás, hanem általános szabályozás. Jogszabály határolja be, hogy mi az a maximum hitel kamat, amit lehet kérni. Ha jól emlékszem, az 30% vagy 33 környékén van. Afölé nem lehet menni, az már uzsora kamatnak számít Magyarországon. Tehát jogszabály is behatárolja körülbelül ezen a szinten.
Okay, and there are special laws which limits the maximum loan interest rate on loans, and it's about 33%, and there's the maximum, and there's a law which prohibit to go above this limit.
További kérdés?
Thank you very much. It's clear.
Do you have any further questions?
Hello, my name is Antonello. I come from Sardinia region, and I'm quite interested in understand. I mean, in which is the role of commercial bank in this. I mean, as far as understood from your presentation, you have the local agency that are microfinancing projects or microfinancing SMEs for startups. But you have also this role for commercial banks, or they are separated?
Gyakorlatilag most a normál banki műveleteket végzik. Tehát bankszámlát vezetnek, és a bankszámláról utalásokat végeznek. De közvetlenül most már nem vesznek részt. Tehát ugye ez egy 20 éves történet volt, amit röviden áttekintettünk. Ugye kezdetben úgy működött a dolog, hogy egy bankszámlát vezettek, és utána ők kötöttek szerződést az ügyféllel, és kvázi a mi bankszámlánkról folyósítottak, de semmi kockázatot nem vállaltak. Viszont ezt drágán csinálták. Ez lett kiváltva a szabályozással. Miután ezt kiváltottuk, utána gyakorlatilag most már simán normál banki műveleteket csinálnak, mint bármilyen cégnél, vezetik a bankszámlákat, utalást indítunk, akkor utalnak, tehát nincs több szerepük. Egyébként a mikrofinanszírozási szektorban finanszírozóként pedig nem vesznek részt, mert nem érdekük. Tehát ilyen alacsony összegű hiteleket gyakorlatilag kis nyereséghányaddal nem működtetnek, tehát ők nem vesznek részt a mikrofinanszírozásban.
Okay. In one hand, the operational banks does the normal banking operations, such as managing the accounts and doing the transactions, but they don't participate directly in microfinancing because we have went through these 20 years of history of the development of the microcrediting sector in Hungary, and actually at the beginning they participated in microfinancing, but they didn't take any risks. So that was the act came in, and now they don't participate, not even as a financiers, because funders, because they don't have any interest in it, they don't take any risks. So they only do the normal yes, exactly.
Hello, thank you. My name is Peter Weiss. I'm from Bratislava municipality. My question will also go to the banks because I think it could be important in the future for the banks to cooperate more. So are you like having with them some intensive communication that you are preparing, for example, the people from the banks to learn more about the microcredits or microloans?
20 éve folyik kommunikáció a bankokkal, ahogy mondtam, korábban részt vettek aktív résztvevőként, de érdekeltség hiányában ez ahogy mondom, megszűnt. Tehát gyakorlatilag már ez is problémát jelentett a kezdeti szakaszban, hogy egyáltalán bankot találjunk, aki nekünk a bankszámlát vezeti, és megköti a szerződéseket a mikrohitelekre vonatkozóan. Tehát olyan szinten nem voltak érdekeltek ennek az ügyfélkörnek a finanszírozásában, hogy már akkor ez a kockázat nélküli feladat is problémát jelentett. Jelenleg ugye a mostani gazdasági helyzetben az a gond, hogy nemhogy a kicsiket nem finanszírozzák Magyarországon a bankok, de a közepes és a nagy vállalkozásokat se. Lehet hallani, hogy 8 milliárd euró környéki tőkekivonás történt Magyarországról a bankok részéről. Leállt a finanszírozás gyakorlatilag, tehát bankok ebben most nem partnerek.
And actually, we have been communicating with banks for 20 years now, and obviously at the beginning they were active actors in the microfinancing, but as they have no interest in taking any risks, It's even a problem for us to find a bank who would do the normal banking operations, such as managing the account or doing the transactions. So actually, even to do these activities with no risks, it's difficult to find a bank. So that's why it's not a good idea in Hungary to communicate well. And now in Hungary, they so actually the banks don't finance not even the small enterprises, but not even the medium and the big enterprises, and they pulled out an 8 billion euros of capital from Hungary. So there's no really financing of the enterprises. Do you have any further questions? Then we are going to continue our presentation. So far we have talked about the Hungarian legislation for the microcrediting sector, and now we are going to talk about the EU legislation planned concerning the microcrediting sector. Basically, it's the European Code of Good Conduct. So why would be there a Code of Good Conduct for microcredit providers in the EU? The European microcredit market is a young and growing sector which has considerable potential. However, this market is still quite heterogeneous due to the disparity of the legal and institutional frameworks in the member states and the diversity of the microcredit providers. As a consequence, lending practices in microcredit vary considerably depending on the type of institution providing microloans, its legal setup, the environment in which it operates, and its own ability to apply sound and efficient management procedures. Under these circumstances, the design of a widely accepted voluntary European Code of Good Conduct for microcredit provision was identified by the Commission as an important element to promote best practice in the field of microcredit. The European Code of Good Conduct was designed in the framework of Jasmine, a pilot project developed in the aftermath of communication on microcredit, adopted by the Commission in November 2007, and also feeds on work carried out previously on the regulation of microcredit in Europe. The objective of the code is to set out good practice guidelines that will better enable the sector to face the challenges of accessing long-term finance. The aim is to provide a document benefiting funders, investors, customers, owners, regulators, and partner organizations. The code is built on recognized best practice in the microfinance sector. It has been developed in close consultation with many stakeholders of the microcredit sector in the EU. Representatives of the banking and non-banking sector, such as academics, funders, investors, customers, owners, regulators, and partner organizations were involved in the project. The development of the code has been guided by the following principles: an emphasis on incorporating specific and measurable content, on the basis of which microcredit provider managers and board can take action to enhance their organizations. An emphasis on developing a code that is adjusted to the diversity of microcredit providers in the EU in terms of market conditions, institutional forms, and legal frameworks. An emphasis on raising standards by balancing the need to introduce best practice with realistic operational expectations of the providers. The code is divided into 5 sections comprising several clauses. The first chapter is customer and investor relations. This section covers obligations of microcredit providers towards customers and investors and rights of customers and investors. The second chapter is governance. This section covers standards for both management and the board of microcredit providers. The third chapter is risk management. This section details common approaches and procedures for managing risks. The fourth chapter is common reporting standards. And this section details which indicators microcredit providers must collect, report, and disclose. And the fifth section is management information systems, and it details common standards for management information systems. A sixth section on social performance, covering ethical and social aspects, will be added to the document in 2012, so it is currently under development. The Code of Good Conduct is primarily addressed to non-bank microcredit providers, which make available to micro-entrepreneurs or self-employed people loans of up to 25,000 euros. It is intended for microcredit provider managers, directors, customers, investors, funders, owners, regulators, and partner organizations. For customers, it is a tool to ensure that they are treated in a fair and ethical way. For investors and funders, it ensures that the sector operates with transparent reporting standards across the European Union. For regulators, it gives reassurance that the sector operates according to reliable business practices and principles, and that it is well governed. For the European Commission, it provides a way to harmonize best practices in the European Union and promote common measures in the sector. It was made clear from the beginning that in the absence of common regulatory frameworks, this European Code of Good Conduct for microcredit provision would not be mandatory, but would rather undergo voluntary sign-up and adherence by the non-bank microcredit providers. Non-bank microcredit providers having signed up to the code will be monitored as regards the implementation of the code. Organizations that are already complying with the banking legislation and the capital requirement directive and are supervised accordingly, such as banks, saving banks, and cooperative banks, will nevertheless have the possibility to endorse the principles of the code. Pilot phase to test the European Code of Good Conduct for microcredit provision has started in November 2011. 17 organizations have volunteered to participate in this exercise, and Fair Enterprise Agency is one of them. Its aim is to identify potential implementation problems and to clarify clauses where it is necessary. It also seeks to collate and disseminate good practice in complying with the clauses of the code. The experience in applying the code and feedback collected from these organizations will give rise to an update of the European Code of Good Conduct for microcredit provision in 2013. And now we give a little insight of the mandatory clauses of the European Code of Good Conduct. And the first chapter is customer and investor relations, and the mandatory clauses are the following. Microcredit providers will disclose the cost as an annual percentage rate of charge. Customers have the right to either withdraw within 14 calendar days of the signing of the credit agreement, or repay their loan in its entirety without incurring extra costs within 14 calendar days of the signing of the credit agreement without having to give a reason. Microcredit providers will have a mechanism for dealing with customer complaints with dedicated staff resources. In the governance chapter, the mandatory clauses are the following. The microcredit provider will produce a business plan that is reviewed on a regular basis, at least once a year, and updated if necessary. The business plan will, at a minimum, cover the following aspects of the business: its mission, goals and objectives, customer and product mix, including piloting and rolling out any new products and reaching out to new customer groups, delivery model, including current and future staffing requirements, delivery partners, legal and institutional form, including any proposed changes to the legal and institutional structure of the institution, detailed budget and forecasting, including income, expenditure, bad debt provisioning, cash flow and balance, funding, including revenue and capital funding, identification of key risks and how these will be managed, And also all microcredit providers will have a board of directors or equivalent body. The majority of board members will be independent, and microcredit providers will be audited by an external auditor on an annual basis. The next chapter is risk management, and the mandatory clauses are the following. Microcredit providers will have formalized and explicit processes and procedures in place to identify, to assess, and to prioritize risks. A senior member of the executive management will be accountable for risk management within the institution. Microcredit providers will limit credit risks by requiring that at least 2 people approve all loans. Microcredit providers will have an explicit internal audit function adjusted to the size of the organization. And now let's see the mandatory clauses for reporting standards. It's the 4th chapter, and it consists of the following clauses: portfolio at risk, operational sustainability ratio, social mission, operational sustainability ratio. Microcredit providers will report and disclose the number of complaints made by applicants and active and past clients, the number of complaints made by applicants and active and past clients as a percentage of applicants and active and past clients respectively. And at last but not least, the management information systems. Microcredit providers will have an MIS that is capable of producing the data necessary for the following key management, operational and financial reports: income statement, balance sheet, daily loan and delinquency reports, ratios and trends. Microcredit providers will have an MIS that is able to monitor and manage loan portfolio quality and functions. Microcredit operators will have an MIS that is able to manage and maintain information about clients. And thank you for the attention. If you have any questions, feel free to ask.
Regarding the business plan, is something that is actually done, or is just a good practice that nobody does it? I don't know if you understand my question.
So regarding the European Commission,
yeah, around the European.
So actually, there's a possibility to join this program, and when you accept this to join this program and you sign it, you get there will be a screening from the European Commission that actually you are suitable for joining this program, because then when signing you accept to you accept the mandatory clauses of the Code of Good Conduct, and when there's a screening and when they find that you are suitable for joining, you get a certificate for that. And after the European Commission considers you to be suitable for participating in any financial program without further screenings. Is it clear now?
Yeah.
Okay.
About the internal audit, I realized that if you join the code, I mean, you have to go through the internal audit. It's something that is organized a level of the agency, of the local agency, or the minister, or how does it work?
So according to the plans, it will be the European Commission who does the audit. But actually now it's the pilot phase, so there are organizations from almost every European Union countries, member states, to participate, because the European Commission needs to check if the clauses, the mandatory clauses, are suitable for every member state's legislation. And when it is done, it will be the European Commission to do the audit. Okay, 15 minutes coffee break from now.